talk some options, and let's talk some crypto too. A lot of things on the mind of Mr. Derek Devens, joining us from Neuberger, Berman, senior portfolio manager and portfolio manager of options strategy. Great to see you, Derek.
Thank you for
Great to
having
have
me.
you.
Yeah, great to be here.
We were just talking about the explosion of zero DTEs. It's been a subject, obviously, over the last several weeks here, comprising like 70% of volume on some days. Are you in that market?
No, we don't do the zero DTEs.
Okay.
That's a little too short dated for us. So
Okay.
when we think about our institutions and some of our goals, whether it's income or hedging or just lower volatility, it hasn't been a space. So I'm hugely supportive of it. It's great for the market in general.
Okay.
But we don't dabble.
You don't like to watch things immediately decay after you.
It's tempting. It's tempting. I think it more of when I think of the dealers out there and a lot of people looking, one of the challenges historically was always hedging your gamma. Well, when you have that type of flow intraday, it really opens up a lot of books. So we get more liquidity, more flow, which is great for institutions and where we traffic. So it's really an ecosystem that's become more balanced, not less.
Tell me about the strategies that you spend most of your time in right now. I know you've got an ETF that's options based. Yes. You've also got a private crypto based fund. So maybe let's, since we're kind of talking the general, let's start with the ETF and let's talk about kind of the accessible for anybody that wants options strategy. What's the goal for that?
Yeah, we're like every, kind of strategy in the space in options is really divided between either directional trading or income. And this is on the income side. So we're in the put right space, to be a little more specific, as opposed to the collars or the hedge strategies. So we're looking to take short-term rates and add income on top of it through index options.
Okay.
So pretty general strategy, but we think it's pretty time tested.
If I'm an advisor and I don't have an options sort of strategy for my clients, is this something I can layer in? Because I feel like that's kind of a starting point for a lot of these advisors, just generating basic income.
Yeah, absolutely. When you think about the two mainstays, which are kind of covered call strategies,
right,
or the long, this is kind of the other half of that. So when covered calls and stuff are, maybe selling away a little bit too much of the upside, as you were talking earlier. What if we get, vol up, stocks up type of situations?
Right.
So we're on the other half of that equation. So we'd absolutely recommend you kind of layer it in, diversifying your income, but also do it more as well from collecting put premiums as well as call premiums.
Using spreads, or is there any time where vols, so you just sell an naked and you say, look, that's
so we systematically risk manage. So it's an interesting concept of, we like spreads, put spreads for certain situations, but we think of a stop loss is just as effective. Why buy the reinsurance when you don't need it most of the time?
Okay, fair enough. Got that. When you look at markets right now, is the vol too low for the things that are at stake, or are we going back to like a 2017 like 11 VIX mode?
It's a great question. I hope, but I don't think we're going back to 2017. I think the analogies right now are more just a product of, there's very few times that you get an easing cycle with a relatively strong economy. So, putting my macro hat on, I think stagflation is more in the equation than it was a year ago.
Okay. But then bonds are pretty chill. So if that's the main threat and bonds aren't too worried, then I guess you're free to take risk.
Yeah. So, and we still live in a world where, lower vol and the momentum is kicking in. Stocks, particularly the S&P, is largely the only game in town. Yeah. Right. When you think about, even if you're a global investor, it has any opportunity, you're buying the S&P.
Okay.
Right? Risk on is buy the S&P.
Or something attached to it, as we heard from Anu Ganti at S&P, $50 trillion of volume growth in the, everything attached into the ecosystem.
Yes.
Into the index world. So, all right, let's talk some crypto then.
All right.
What are you doing with crypto, and what is the kind of client base you're trying to target here? Because obviously Neuberger Berman, I think about having as a very sort of institutional general appeal. What do they want from crypto, and how are you using it?
Yeah, so 5 years ago, believe it or not, we tried to bring it more into the institutional space. So when you think about using derivatives markets, for most of my career and everybody else's, you think of derivatives being the next layer. Well, in crypto, it was actually a very secure layer, because you get central clearing, you get a lot of things that didn't exist in the, what you call the DeFi world.
Swamps.
Yeah, exactly. Good. So now we tried to move that more into the institutional space, launched a fund, have had some success with institutions, and now with the ETF options on Ethereum, Solana, Bitcoin, it's really a robust environment to take some of that exogenous risk or that counterparty risk, the liquidity. And, you still hold your tokens, but you have more options, pun intended.
Yeah, you use options on crypto. So when you think about crypto, a lot of times in kind of the just general investing world, crypto is related. You're in it for direction you're in it for upside. You're in it for price action. Is that a goal here, or do you want to take that kind of volatility and reap income from it similarly to how you do in equities, or do you want to be on the price ride for crypto?
I hate to have a foot in both canoes, but we want a little bit of both.
Okay.
So we're not a true market neutral. So when I think about the crypto in the DeFi world, tries to trade a lot of rel val, right? You're looking at maybe some of the fringe tokens and trying to trade relative value. We wanted to also be a little bit more defensive and hedge. So I think of it more of like a hedge fund with a coupon.
Okay.
Right. So you think about liquid alternatives, you think about other things. You can just go buy Bitcoin or be directional, which is one strategy. So we're trying to, I think, be more a little bit in the alt space, but not a market neutral. It's so volatile. Being market neutral kind of defeats the point.
Right. Now, that's kind of okay. So I was debating in my head whether or not to ask this philosophical question, but I will, since you mentioned that. What do you think happens if Bitcoin calms down? Because one of the things that's been really interesting is obviously Ethereum had this great outperformance in the last several months where Bitcoin had this great run, but then keeps kind of grinding around this 120-ish. If I take a line from momentum, which I look at RSI a lot, even as Bitcoin made new highs, the RSI went down. It's kind of like it's either maturing or maybe MicroStrategy stole all of the risk thunder. I don't know, but I'm curious how you think about that. In a world of maybe a calmer Bitcoin, how would that change the way it trades or who it appeals to?
Well, one, I think it favors our type of strategies in the Bitcoin world. And I do think the maturation is coming. I do think Ethereum and Solana and some of the what I consider more app-based are going to decouple from, not in a bad way decoupling, but just they're going to have a little bit lower correlation to Bitcoin. So you've had the maturation of Bitcoin. And then now once AI kind of finishes stealing the spotlight for the last couple of years, you're going to get back to the idea that AI is going to need some of these digital apps and the blockchains to do more. And so then you're going to see a real race for Solana with its speed and cost efficiency versus Ethereum and its broader platform. So I think that heats up as you move away and get Bitcoin to kind of solidify as basically a digital asset. Then you get backfilled with the smart contract platforms. Very fun. Can you give us a little idea right now what the secret sauce is in the fund? Are you leaning into any particular token more than others? I kind of previewed that I've been doing more work, and I like the Solana, faster, cheaper, better. It's going to really compete with Ethereum. So from just a horse race with the big two, I think of it as Microsoft and Apple. Both are going to be winners, but I think Solana kind of is going to close the gap a little bit. Nice. All right. Good stuff. Derek Devens. Fun. Thanks. All right. Be in touch. Thank you. Nice. There are options, crypto, ETFs, and more. Derek Devens, Neuberger, Berman. We'll be right back, taking a little break, and then we got some SIBO folks. Got two good ones joining us as we continue to talk about what's happening here at the Risk Management Conference in Munich, Germany, Bavaria. Be right back.